Hello and welcome to our exercises on accounting equation. We'll take another exercise to prepare the accounting equation and understand how the transactions can be converted into accounting equation. So started business with cash 100,000. So cash will appear on the accounting equation as an asset, and the corresponding capital or the corresponding source is capital. Avail 10% loan, so cash increases by 60,000. No change in the capital, but a loan will appear on the accounting equation 60,000. We can see the total of sources equal to the total of assets. Purchase stock of goods for 80,000, inventory 80,000, and no change in cash. No, cash will reduce because it is for cash. No change in the capital, no change in the loan. So the totals of the assets and the total of the sources remain same, but the composition of the assets has changed where the cash has been converted to stock. Purchase plant on credit for 50,000 from X. So plant is an asset. So acquisition of asset here resulted in creation of a liability called the supplier of plant 50,000. Other than that, no change in the capital, no change in the loan, no change in cash, and no change in the stock. So acquisition of asset in this case has resulted in decrease in cash. Acquisition of asset in this case has resulted in creation of a liability in the form of Mr. X. Now, unlike the previous case, here we are not selling the entire stock, but only 60% of the stock sold. So the stock will reduce to the extent of 60%. The stock will be only 40%, that is 32,000 left. And it is sold for 50,000. So cash will increase to the extent of 50,000. No change in the plant, no change in the capital, no change in loan, no change in X liability, but there is a profit. The profit is equal to sales minus the cost of the goods sold, and the cost of the goods sold is 60% of it, the 60% of this stock. So 200, the profit is 2,000. So the total of assets are equal to the total of sources. So once again, this small exercise demonstrates that every transaction will affect the assets and the sources in such a way that S will be equal to A. But this accounting equation can also be presented in this format as a summary of the accounting equation is a equity plus liability is equal to assets, which we can see this that at any point of time the assets are financed by equity and the liability. Let us take from the last transaction. So the assets are 212 and the liabilities are X and loan, and equity is the capital plus profits. If we take the third transaction, the asset is 160,000, liabilities are X and loan is 60,000, and equity is the capital plus profit. There is no capital, there is no profit, equity is only capital. So at any point of time, given the set of transactions, it is possible to prepare the accounting equation either showing each and every financial item or showing a summary of the accounting equation in the form of equity plus liability is equal to assets. Thank you very much.